Hi fellow traders, I'm going to share my view of Euro USD. So here we are on daily time frame of Euro USD and I have plotted a Gartley which is perfectly harmonic. So I'm talking about X, A, B, C, D, where D is at 61.8% retracement of movement from X to A, and the CD movement is equal to AB, which makes it a perfect Gartley suitable for bearish movement. And it looks like the market has started already moving to the downside, and there was a thrusting downward action on Thursday. But I want to attract your attention to fundamental news. So let's go back on calendar and see what happens on Tuesday. Euro tried to move down, however, it didn't close as a bearish candle, despite there was positive CPI. So there was there were three released CPI. One was monthly CPI, another one was monthly core CPI, and then there was yearly CPI. So besides CPI, other two data, monthly core CPI and yearly CPI, were better than forecast by 0.1%. However, there was no sustainable move to the downside for the day in Euro USD, and the candle closed as a doji candle, which shows that the market was in indecision, and then there was a bullish movement to the upside of almost similar magnitude if we look at the previous 2 days, Monday and Tuesday and Wednesday. So Wednesday was not a big bullish movement, and then if we look at the movement of Thursday, it was a significant bearish move, and this candle alone is a bearish engulfing candle, which actually suggests that the bearish Gartley has started working, and we can expect further fall in this currency pair. But if we look at the fundamental news released on Thursday, there were two major things. One was retail sales from the US, which were negative. Both core retail sales and retail sales were negative. Even revision in those data were negative. And if we look at the PPI, both PPI and core PPI were more than forecast. So if we look at the importance of the data, retail sales is as important as PPI, and having seen no significant reaction on Tuesday after positive CPI, it was really surprising that we saw a downward move in Euro USD, although retail sales were negative. PPI was positive. So basically, they cancel the effect of each other. If we summarize PPI and retail sales, one was negative, another one was positive. However, we saw that the market actually reacted more to the PPI, and the market ignored retail sales news. So it looks like nowadays market is more concerned about PPI, PC, and CPI rather than retail sales or GDP. And now, if we look at the technical picture, we have another contradicting technical picture here, which is a rising channel. Although channel is not a guarantee of sustainable movement, channel is supposed to be broken sooner or later. Any trend line can be broken. So basically, this is a lower line of the channel. This, just like Gartley, the channel is also perfect. It's a perfect equidistant channel with upper line and lower line perfectly parallel to each other, and that's why technical traders will start entering buy position from here, especially after this slight pause in the downward movement. The whole candle of Friday has become a spinning top, which suggests that the market has taken a pause, and now upcoming week will be a deciding week where the market is going to continue to the downside or it's going to bounce from this lower line, lower part of the channel. Besides the channel, there is one more thing in support of bullish possible movement, which is this indicator. You see this line. This is MACD predictor. It doesn't work in most cases, but sometimes I have seen that the market touches MACD predictor and then it does not break beyond this, then it returns back and it takes the previous stop. For example, if there are sellers, they have their stop above this point D, so it can return back and go beyond D to take the stop of the sellers, and that's why this setup is called stop grabber. And this is the uh, temporary bullish setup suggested by this MACD predictor. For example, we can see this worked here. Market tried to go to the downside and penetrated below this MACD predictor here. I'm showing the pointer here, but then market started going up. Same thing happened here when market tried to go up, uh, almost near MACD predictor. Second day again almost near MACD predictor. Third day penetrated above, didn't close above, and then finally continued to the downside. So yes, it may work, and theoretically, if we believe in the trading methods of Georgina, probably uh, stock grabber is a thing. So these are the things we have: channel and stop grabber together are suggesting bullish move, whereas this engulfing daily candle to the downside, bearish engulfing candle, and this XABCD Gartley suggesting downward move. So we have downward setup, we have bearish setup, we have bullish setup, and that's why we need to go to the 1 hour time frame to understand what probably we can do until March 20, when uh, FOMC statement will come, and we'll have a clear picture how soon or how sooner or later they're gonna pause the interest. I mean, they have already paused the interest rate hike. They may indicate how sooner or later they're gonna start cutting the interest rate. So if they give any indication of any sooner interest rate cut, as market is anticipating, most people, most investors, most analysts are anticipating that there can be at least 25 basis point cut by the month of June. So if there will be any change in this anticipation, if there will be any indication that they are going not to do any cut in June, then you'll see fall in Euro USD. And if they simply say the same thing, that it will depend on the data, like they always say that we have, uh, I mean, we have uh, we have been successful to control the inflation and by hiking the interest rate, and we have made some progress. So these are the kind of things which we have recently seen from the Fed. So if we see the similar thing, if we still see that, I mean, if there's simply a downplay 0.1% better CPI, or if they downplay the PCE, and if they simply say that we are on the correct path of controlling the inflation, it means they are more inclined to cut the interest rate, and then you'll see uh, bullish movement in Euro USD. So that's why if we are really going for daily swing trading and we want to wait, we should rather wait for FOMC, and then we should make a decision. Meanwhile, what we can do is we can go to 1 hour time frame and we can try to scalp, or we can also look at this smaller swings, for example 1 hour. So you can call it scalping or swing trading on a smaller time frame, whatever you would like to say. So market may move uh, in a tight range, maybe 50 pips or 40 pips, 500 or 400 points a day until FOMC on March 20. So what we have here, so until March 20, there are chances that even bearish forces may or may not work. But Monday alone can be a decisive factor to invalidate or sustain the bullish setup, because right now we are exactly at MACD predictor and the lower border of the channel, the two factors supporting bullish idea. And if we'll have even a 50 pips candle to the downside on Monday, not like a dozy candle or spinning top, we if we will have a full body candle, or at least 70-80% how the body should be there in the candle. And if we get such kind of bearish candle with 70% real body or maybe 30% wicks, people also call it tail, then it will invalidate the bullish setup. It will be rather considered that the USD has broken down below this channel. So Monday itself will be a decisive factor whether this bullish setup will sustain or not. And then and then we'll have a clearer technical picture by um, March 20. So let's see what happens on Monday. Meanwhile, if we look at the 1 hour time frame, we have a temporary setup which suggests that market may move to the upside by this A, B, C, D movement, and this is the 100% extension level where we can set the TP if we are going to open a long position. And yes, market may continue to the upside because we do not have any significant uh, factor or significant data or news coming to disturb the setup. But still, we are not going to enter right here because what we have now is consolidation. For example, if we look at this candle, this is some sort of um, a bearish candle. It looks like what we call it. Um, Inverted hammer, then there is some sort of like shooting star, then again there is hammer. All of these candles, you can see that they have negligible real body in these three candles. I'm talking about this one and this one, and all of these three candles together are suggesting that there was no sustainable bearish or bullish force, although market moved to the upside and downside in a range of 140 points, that is 140 pips, 140 or 135 approximately. So I want market at least to go beyond this range to the upside before I enter the buy position, from where we have not very good reward. For example, if we let the market go to the upside and then we enter here above this high, so that will be the price level, and then we set the stop loss below this low, then our risk will be something around 15 point something or 16 pips, and our reward will be 13 point something. So if you don't want to sit on hand and want to do something before March 20, and if you see market going to the upside, you can take a buy entry at 108.94.4. That will be the sell price. Buy price maybe 108.96, and you can target this. So this is the only setup we have. Or else, if we see that the market continues to the downside, and then if we see that market closes below this low, so this will actually after these three candles where market was in a range, let me define the range by a rectangle to make it more conspicuous. 1 second. So alright, so I'm talking about this range. I will make it light blue and as a background. Alright, so for bears, if we see any movement to the downside, we can enter sell position below this range, and we can go to 15-minute time frame to understand the momentum of the price in the European session. So if we take our entry here, our SL will be 15-16 pip, just like the buy setup, and we can take a TP of similar. I do not want to go for a longer TP before March 20. So if the stop loss will be 16 pips, I will simply set my TP for 16 pips. Even if this will succeed to the downside, TP may be hit and then market may come back and may close above this line, which is the lower border of the channel on daily time frame. You remember this channel, right? So we do not know whether Monday will close as a full body candle or at least 70% real body. Monday may close just like a dozy or just like a speeding top. So market may go down, may come back. So that's why it's rather better to take smaller TP and get out of the market, and then plan further trading. Plan for further trading according to what happens on March 20 after FOMC. So that's all we have right now on EUR. Thank you for watching.